lagging relative strength line for AMD. We'll also be keeping an eye on reports from Alphabet, Apple, and Microsoft after the close today. So there you have it, Dave. We'll throw it back over to you. Okay.
You're on mute, Dave.
No.
And it's always got to be a first, right? Thank you, Justin. Once again, thanks to
say all those nice things you were saying that people didn't hear. Okay, thank you.
Exactly. Thanks to Ken for wonderful digest of news. I'm going to share my screen now, which shows the S&P 500, the Thinkorswim platform. We have still the nicely anchored regression channels starting with April 2nd, 2020, ending with November 11th, 2020. Those are key junctures in the stock market. And I'm going to start with you, Chris, because I feel really good about the way the market has been acting, at least from the point of this regression channel and the S&P.
Yeah, it's been acting well. It got support at the 50-day and has approached the center line of the regression channel, the regression itself. So all that looks good. To me, what I keep focusing on is the Qs, and they're back to being, in near extended. I mean, 6.5%. They reversed, a week ago or a week and a half ago when they were about 6.8% above the 50-day moving average.
Quick follow-up question, then I'm going to have David chime in here. Notice on this chart of the S&P 500, SPX on Thinkorswim, these candles look to have quite positive bodies, meaning that the amount of space between the open and the close were quite thick in terms of the candles themselves. Your thoughts on that?
For David or for me?
Oh, for you.
Oh, I'm sorry. Yeah. No, it looks good. And then the third day up was a nice reversal. But the last 2 days it's been tighter action, which actually not bad. It's just we'll see how it handles it.
Okay, and so David, it's been a week since you were last on the show. If I remember correctly, at the time I think you were saying that you were finding more opportunities to buy. Is that pretty much the same case now?
No, I think I actually said that I had even more cash than I did even weeks before, because what I'm finding is that it seems like the market is narrowing in the number of names, and I also said, which is really interesting, if you actually back up this picture of the S&P 500 and just take it back to the beginning of the year, you'll see that, and I wrote this down. It seems like every 4, 5, 6 weeks, you get this 2 or 3 day drop that takes a lot of, that really starts correcting hard, and then the market comes right on back. And it's happened on 1/29, and then 5 weeks later, it happened on March 4th. And then 3 weeks later, it happened on March 25th. And then if you go to May 12th, 6 weeks later, it did it again. And then really 6 weeks from there on June 18th, there you go again. And then we did this again, just, coming into, it was Friday and Monday, 4 weeks later on 7/19, we had another drop. And so it's got this rhythm to it. Every 5 to 6 weeks, it comes down hard. Now we've got a pattern going, and now once we recognize that pattern, it's probably going to change. But it's something that we should keep an eye out for. If the market starts deviating from that, if we come down even more than 2 days, if it starts going into 3 or 4 days, then maybe the market will go into a normal, 7 or 8% correction, or we'll see how we go from there. But it's just something I noticed. And what happens also too is every time you correct, it seems the market rotates into a different different group or different sectors start performing better when you have that 2 or 3 day drop that kind of scares everybody, and I start selling things off. So something to keep an eye on if we start moving away from that pattern of dropping every 4 to 6 weeks.
Well said. And Ken, you mentioned that the small caps, right? They've been on the receiving the low end or the small end of the stick, so to speak, right? And I'm seeing on Thinkorswim right now that the Russell is leading the downside, down 0.7%, and mid caps represented by MDY down 0.8%. Your thoughts about the rotation?
Yeah, I mean, it's the small caps have been struggling for a little while. It gave up the 50-day moving average 2 to 3 weeks ago, and really hasn't made much of an effort to reclaim the line. The IWM came down to broke the 50-day, came down to the 200-day moving average, tried to rally back last week and couldn't quite make it to the 50-day, and under some pressure today. So I think the market can continue to work even with small caps lagging. I mean, the market has shown that with new highs yesterday for the Nasdaq and the S&P 500. Would be nice to see the small caps get back above the 50-day moving average, but they certainly have been lagging the market.
Very good, guys. And right now it looks like the Nasdaq composite's down about 0.3%. Above here we have a list of the IBD leaderboard names, and you can see even among leaders it's kind of mixed. DXC, which we'll talk about in a moment, is leading the downside, but not significantly, 1.3%. Crocs, CROX, that's also down 1.3%. We have Roku going to report later, perhaps in several weeks. That's on the upside. NVIDIA making another rebound. There are currently 57 stocks right now on the ready list. I just want to highlight for everyone's knowledge that these stocks were recently added to the ready list, and they include MTCH, that's Match, PTC, Five Below, that's FIVE, and JBL, Jabil. And some of these can be considered swing trades. Most of them are probably going to be considered more position trades. And also Hasbro, HAS, which we talked about on the show, that was added to the watch list on that really, really nice earnings. Above the leadership list here, we can see that there are quite a lot of stocks that are down. And leading the way, UPS, SE, MEDP, that's MedPace, VRTV, and VR, and let's see, and ESI. Those are some of the ones that are down 2% or more. It looks like some of the big cap techs like AMAT and Integris now, Ken, it's down about 1.9%. So you mentioned that it was kind of hard to tell what the pre-market was doing.
Yeah. And Tesla is interesting. This was indicated higher in aftermarket and in pre-market trading. Gains had started to fade, but now it has turned lower, has reversed off its high, hanging in there at around 655. But that initial positive reaction to earnings, has faded a little bit.
Let's go to DXC. That's Chris, one of Chris's stocks you want to highlight here. Nice little rebound off the 50-day ahead of this decline.
Yeah, and if you can draw a trend line there through the base, it might even be breaking it today.
Yeah, let me expand this a little bit. 125% zoom. Okay, and let's draw a trend line. So are you drawing it from the very top of this flat base, right? Okay. I'm going to hold the control button and simply drag with the mouse there. So that one's pretty tightly drawn. Would you agree?
Yeah, right there.
Okay.
So yeah, and it's pulled back down to the 50-day again here. So very quiet volume the last couple weeks. And if we get a pop, maybe on an upgrade, earnings are next week. That might be the catalyst. But what I like about this stock, this is one of the few breakouts back in March and April that actually worked, where we spotted it on the blue dot screen because it didn't have good numbers. It was but it was clear that the estimates were were positive for 2022 and 2023, and we did a quick bit of research, and there was a big turnaround. I think a huge portion of the senior management had been